Newsroom right here on ET Now. I am Ajay Sharma. The highlight of the market in the first hour of the trading session is that market is trading off highs. In fact, the broader markets are seeing much wider correction, which is playing out right now. Understandably so, the flows have been very strong. Broader markets has been on a tear. So some amount of profit taking is not a bad thing. Actually, it makes the market. Look at how stocks like aviation stocks are buzzing in trade. SpiceJet, Interglobe, very smart moves coming in there. Bajaj Twins continue to surge. A lot of activity happening there, and insurance and festive cheer coming in. So those two are on fire, and that is travel stocks overall. IRCTC, we've got to the management lately, and there is clearly a lot of move up there. Let's take the discussion forward on how investing is panning out at this kind of a market. Neil Bahal is joining us. He runs his own PMS and has a very keen eye on special situations on the one hand and also technology related plays on the other. Neil, great to have you back. Thanks for your time. Let's start by understanding one of the special situations which you are analyzing and have been writing about it as well, and that is the company GMR Infra. It houses one of the very interesting assets, which is airport assets. Now, airport assets is pretty unique. Not many people know how to analyze it, but an emerging market which is bustling with business, and we are seeing the number of routes being added to airlines, and every small city is witnessing new airports coming up. How do you analyze the main attraction of airports business in GMR Infra?
Hi Ajay, thank you for inviting me. It's a pleasure to be on your show. Before we get into talking about GMR Infra, the whole idea, the concept of special situations is that we have to go back and ask ourselves, what is true investing? True investing means, buying the best quality asset at the best quality price. So when you want to do that, special situations offer a great way to do it. So coming to GMR is a conglomerate. Everyone knows they have the airport business and they have some associated business in infrastructure, power, they have some land bank. Investors such as us who want to invest only in a particular set of business like the airport business and say we don't want to invest in infrastructure assets. So we can't buy GMR Infra as it is when it's listed. But when the company wants to unlock value and demerge the two businesses and list the airport separately and the infrastructure assets separately, it becomes very attractive for investors like us. The idea being you get one of India's premier assets. The airport asset is controlling almost a quarter of all of India's passenger traffic right now, airline traffic right now. So, and you're getting it at a very cheap price. So that's the reason we got attracted into GMR Infra. And, if you kind of go and take a step back and you see how the airport businesses are trading globally, there is a very interesting deal happening in Sydney right now, where the Sydney airport is getting bought out. The multiple that they have decided to buy out the airport is 50 times EBITDA. Now, that is just one airport in Australia. India is a growth economy. Right now, the whatever airline passengers are there right now is going to increase multifold in the year to come. So something like a GMR offers us a very, very high quality monopolistic asset at a very fair price. So this is the whole objective of doing a special situation, and that is what got us attracted in GMR.
Neil, Poonawalla Finance, the Magma Fincorp turned Poonawalla Finance is also something which interests you more, because of the promoter which have come in and what they want to build. But at the same time, it is in the middle of a bit of a bad news, which is one of the senior officials have been alleged of insider trading, all of that, some nervousness on the company. But what's your big picture out there? What to your mind, can Poonawalla family build out of this business?
So, so this is also a special situation where a new promoter comes in and changes everything that was earlier happening in the company. So earlier, this company used to be called Magma Fincorp, and now it has been renamed as Poonawalla Fincorp. So Poonawallas are known for excellence in what they do. Their pharma business is one of India's best run businesses. And the idea is that they're going to utilize their balance sheet and the strength and their understanding of business and try to create a much better fintech kind of operation in this NBFC of theirs. And they have changed everything. They have replaced the entire team. They've got a started new team, and the idea is to create one of India's biggest NBFCs. So when something like this happens, where a very big uh, promoter house has come and taken over a business, and they are putting a lot of time and effort to build it, so people like us who are investors, we just need to pay close attention and just coattail them, just go with them. Because if you play the averages in such kind of investing and you invest in a bunch of these kind of companies, maybe some of them may play out well, some of them may not, but the ones which play out well end up creating so much value over the coming years. It makes it worthwhile. So I will not get into the specifics of Poonawallas, what is going on, uh, but these kind of investments, if a investor focuses on special situation, which is a very ignored style of investing. This is a very Western style of investing, an American style of investing. In India, is largely ignored by everyone. This is something that we need to kind of keep an eye on, and this would do very good for investors.
Fair point. I get your point. Neil, also one recently listed consumer tech company is CarTrade. Got a lukewarm listing, and not many people are talking about it right now. Probably got to do with the way it was priced, etc., or valuations. So, two-part question: what are your thoughts on how to value this company? And the business they are in clearly is booming. The commentators seem to be suggesting that the chip shortage in the OEM market is actually boosting demand for pre-owned and pre-used vehicles, and these platforms are actually doing very brisk business. What are your thoughts? What shape and size could be attained here on a 3 to 5 year plus kind of horizon?
Yes. So again, the technology revolution in India has just begun. And unfortunately, not many people are appreciating this fact. Everybody in the stock market generally looks only at profits today. The idea is to look at these platforms and what they are capable of, what they're going to be capable to do many years later. I don't want to talk only about this one business. Basically, the whole idea is to understand the entire, universe of tech businesses in India. But taking example of CarTrade is that CarTrade today is in the used car segment. Now, the used car buying and selling market and the buying and selling business is one of the most phenomenal businesses that are there today. I don't think anybody can be in the business of used car buying and selling and make a loss. It is not possible to make a loss. It's an extraordinary business. And now, what we need to understand as investors is that maybe the price could be expensive today, but we need to understand where the company is headed. They are only in the used car segment right now. They have so much more to do. They have to now get into the new car segment. They have to get into insurance broking. They have to get into financing. So the platform right now is just getting stabilized, and they are going to now start having to build a lot of businesses going forward. And when you invest in these kind of businesses, what is the core thesis? The core thesis is that these organized players with the power of technology, internet, e-commerce are going to take market share from the unorganized segment. The ease of doing business with these kind of platforms is very easy. So India's economy may go up and down for the next 5-10 years, but these kind of businesses, the bunch of these businesses, their revenues are going to go up maybe for the next 10 years in a row, maybe the next 15 years in a row. So you're getting structural growth. Maybe you're sacrifice 1 or 2 years of expensive valuations, but then you're getting exponential growth in the coming years. So I really believe in technology as a space, and I feel whatever is going on in the world, which is good today, is getting backed by technology. Whether it is selling underwear online, or it is doing a proper tech business, or selling food. So whatever it is, technology is helping everything, and we as investors need to keep an eye on it. Otherwise, we may miss the bus. This is India's golden moment.
Right. All right, Neil, I'll let you go on that one. Thanks so much for helping us understand these business, the way you look at it. And by the way, congratulations of doing so well at your PMS these past 18 months. So good going out there.
Thank you so much. Thank
Well,
you.